Let's bring on board Ajay Bagga joining in with us as well. Ajay, very good afternoon and thank you so much for joining in with us on ET Now as always. I'm going to come to you and talk about one of the stocks that have been buzzing away, has hit a record high level. Obviously, BofA has upgraded it today, and that is Shriram Finance. When you're looking at it, also third consecutive month of gain that we've seen, strong returns already. Ajay, fundamentally, how is Shriram Finance looking? What do you see? Where do you see it headed from here on now?
Particular stocks I don't talk about, but I'll take it, to the broader NBFC sector. We are expecting revenues and margins to go down over the year. The growth trajectory to go down, single digit growth in profits. So the kind of, run up today we are seeing in some select NBFC counters, we should be cautious about it. Cost of capital is increasing and the margins are under pressure. RBI has been putting pressure as well on certain segments of the NBFCs. In this, uh, the truck finance and the vehicle finance, they have been doing well. But what we have seen is that the end user has usage has not really picked up yet, and the linkages with the rural economy are strong. We'll have to wait and watch. Some of the NBFCs have a lot going in the rural economy where the demand has still not picked up. So I am a little circumspect on this NBFC segment. I think margins will come down and the growth trajectory of revenues as well as profits will come into single digit this year. I think that's the anticipation.
Ajay, hi, afternoon. Have to talk about IT. We'll have TCS Infosys deliver its numbers. Tomorrow you've got Wipro, HCL Technologies as well. And in particular, talking about Infosys, the anticipation is that there could be a further lowering of guidance, clearly indicating that, the poison is not quite out of the system yet.
Yeah, quite a few segments in the US and in Europe, we are seeing a slowdown in the orders. And we have seen some major orders also either getting postponed or outright cancelled. So, Aisha, we'll be looking at clearly what is the headcount, what is the margin position, and I think the crux will be in terms of the new revenue avenues. So, how is the artificial intelligence rollout for companies going? What are the cloud revenue growth looking like? I think those will be very critical for the IT majors, and we'll get a lot of clarity now after the TCS and Infosys results. But clearly, right now, we are seeing a slowdown and we don't expect more than flat numbers for them. Uh, what we could see is in the smaller IT companies, the niche players, they could be getting a benefit of some new orders, but the bigger established players are having an issue, and I think a lot will depend on recalibrating the business models or getting the new capabilities in of helping companies to bring in artificial intelligence into their operations, machine learning, and all those streams will become very critical. But overall, looking at a flattish quarter for the Indian IT space for the quarter three of FY 2024.
Absolutely. Flattish quarter is what we were expecting for IT. But, Kunal, I'm going to come to you because all that's glittering is clearly those jewelry stocks. And some of them are newly listed players like RBZ Jewelers, Moti Sons, Senco Gold also among the recent listings that have come in. Overall, in this space, is this something you would go and move towards the newer players? Do you find more value there? Or is that, you would still look at something like a Titan or a Kalyan Jewelers, which is there in this play for a while?
So I think it's a different set of charts altogether for the space. For example, Senco Gold, I think recently listed, the stock has done pretty well from 360, 360, 380 levels to a point when the stock is almost at 780 mark. In fact, today the stock made a high which is closer to 850 levels, and it's from the intraday highs that the stock has seen a correction. But then when I look at the charts, it's almost ending 2-3 months of consolidation closer to this 800 level. So which means that the stock may not be immediately ready for a breakout on the upside, but I think post maybe another couple of weeks of consolidation, I think 800 could be a good point for a breakout for the stock on the medium to long term charts. Titan of course has been a phenomenal gainer over the last couple of decades. In fact, even at current levels, I would actually believe that it's a stock which is showing a lot of consistency from the entire pack. Kalyan Jewellers is something which has sprung up quite well. In fact, the last 1 year specifically, the stock has been a lot more consistent with the charts. There was just one phase of a correction where Kalyan Jewellers I think corrected from 350, 360 levels to 300, 310, which is a good 15% odd correction. But I think post that, we've actually seen the stock do pretty well for itself. So again, a different kind of a chart altogether for Kalyan Jewellers, more of a consistent stock, less beta. But then I think from the space so far, it's Titan which looks attractive from a long-term play, and Senco Gold could be looked out for if as and when the stock breaks past about the 800 levels.
Okay, that's the take coming in on what to expect from the jewelry retail segment. But can't take your eyes off from the standard today, and that's Reliance Industries once again holding higher as we speak, a good 2.5% of an uptick coming in. Samit is here to tell us why Reliance has been outperforming since yesterday. Samit?
Well, in fact, if you see in the last couple of days, Reliance Industries has managed to gain close to 5%. Now, yesterday's 2.7% move was the highest move of Reliance Industries that we have seen since July 10, 2023. And yesterday, if you see, the stock was around 8% above its 50 DMA, 10% above its 100 DMA, and 12% above its 200 DMA. Now, what this means is that even if there's a fall, the downside would be limited for Reliance Industries as the share prices are not much higher compared to its daily moving averages. Now, apart from that, if you see in 2023, Reliance Industries was an underperformer as compared to benchmark because the Nifty was up around 20 odd percent, while Reliance Industries share prices were up around 11 odd percent. And since 2015 till now, never has Reliance Industries underperformed the benchmark for 2 consecutive years. So will Reliance Industries outperform in 2024? Let's look at the triggers first for Reliance Industries. Now, when it comes to the retail segment, it is the expansion of the businesses, and which will also start resulting or delivering into the financials, which will boost the financials of a retail segment. Along with this, it's the rising digital presence that the company has in the retail segment. When it comes to the telecom segment, tariff hike is the single biggest trigger for the telecom segment. Apart from this, it's the broadband expansion and the continuous rise in the subscriber base. When it comes to the O2C segment, that is the oil to chemical segment, this segment has reported range-bound results. The demand has also been pretty much stable. It is called the cash cow business of Reliance Industries and is expected to remain a cash cow at least for the next 7 years. When it comes to the gas exploration business, the gas demand in India has been increasing, gas prices have been stable, while the gas production of Reliance Industries has also been on an uptrend, and this business could also become one of the cash cows for Reliance Industries going forward. And lastly, when it comes to the new energy business, the commissioning of some of its projects is expected in the mid of 2024, and this segment is expected to contribute significantly to the company's earnings in the next calendar year, that is 2025. Now, apart from this, the other factors that are working in favor of Reliance Industries is if one needs to play the India growth story, Reliance Industries is one of the best bet given the fact that it gives you an exposure to telecom, retail, oil and gas and new energy. Apart from this, Reliance Industries also has an option to demerge its retail and telecom arm, and they are also expecting some value unlocking when it comes to the new energy business. And then when it comes to deleveraging, that is also expected to start in the mid of 2024. And lastly, the valuations of Reliance Industries, they are cheap in a relatively expensive market. Now, if you see the 12-month forward valuations of Reliance Industries, they stand at close to 11.6 times, while the 5-year average valuations or EV to EBITDA of Reliance Industries, they stand at around 12.3 times. So these are broadly the factors that could be working in favor of Reliance Industries.
Okay, Samit, thank you so much for that roundup on Reliance, and surely the stock is buzzing away in trade also right now. As of now, today also the stock is up more than 2%. But Ajay, India growth story is what Samit was talking about as well. Yesterday, we did hear Mukesh Ambani talk about their investments at Vibrant Gujarat as well, in Gujarat as well. And obviously the play coming in when you look at it, the retail side, telecom side. So as a, looking at the India growth story, is that something you would look at as well with so much value there as well?
No, definitely the India growth story is getting stronger and stronger. And what is the big change that has happened post December 3rd? that the market is factoring in political continuity. So there was a big risk embedded in the Indian markets in terms of the national elections, how they would pan out. That has got worked out to a large extent. So the markets are factoring in a lot of political continuity. So I think these plays, and especially the capital goods, infrastructure, telecom, oil and gas, power, all the broad economy, the real economy related plays are going to do pretty well.
Ajay, hold on to that thought. Lots more to talk about. For now, of course, the big high flyers, Voltas, Torrent Pharma, Hero MotoCorp, and Shriram Finance, of course, continues to look good amongst the large caps. Not just Hero MotoCorp, but like Reliance, we've been discussing, and Bajaj Auto too, holding up very, very smartly. We'll take a very quick break. When we come back, the last lap of today's trade. Back with closing trades right here in ET now. We're still just about quiet, marginally higher as we speak right now. So, it's a bit of a tough fight to actually stay afloat right now. While, of course, Reliance is really supporting the index, Axis Bank is higher. But look at what's happening with the entire IT pack. L&T is down today. ICICI Bank once again is drifting into the red. And similar is the case with an SBI as well as Kotak Bank too. Let's take it across and hear our conversation with A. Bala. We will do that in just a second from now. But the gas stocks, like we were flagging off earlier, they're holding out pretty okay. So MGL has now sprung up a good 5.25% as we speak. But no resurrection for a Polycab. Z is still down 3.25%. Infosys, ahead of its numbers, has now cracked 2.25%, and I think we're at the lowest point in the day for Infi, 2% lower when it comes to the cash markets. 1490 is where the stock is right now, and actually the biggest laggard now on the index. Kunal, further weakness in Infi, and would you be tempted to short any of the IT names here?
So I think the best way to trade now the IT stocks is to trade them post results, because there are two data points which are a bit more tricky for IT names. The IVs, the implied walls for Infosys, for example, have shot up to almost 28 odd mark. The last I had seen during the day. That generally is an indication that we could be in for a big kind of a gap up, gap down opening for Infosys, depending on the results. But in case if the stock actually doesn't open with a severe kind of a cut on the downside, or a major kind of an uptick in terms of a gap up opening, then we could actually be looking at a point where we may look to initiate a buy or a sell depending on how the stock gaps up or gaps down respectively. So I think the better way to trade for the IT stocks is actually post results. Pre-results, it's going to be a bit more tricky because of the huge volatility implied walls the stock has already shown so far, as well as the way the stock has run up in the last couple of weeks. So my sense is that it's always better to try and wait out for the event to cull out, and then post event, once the stock gets into a clear direction of a breakout or breakdown, then take the call in that sense.
Sure, and let's move on. And actually, in terms of on the sidelines of Vibrant Gujarat Summit, Tarun Mehta, CEO at Ather Energy, actually spoke to my colleague Sumit Chaturvedi. Listen in to what he's shared in terms of his plans for the IPO. Listen in.
So I can't comment about the timeline, but as I've been telling others, I think going public is linked to the maturity of the business. If you look at our cap table, if you look at our kind of shareholders and what it has done over the last 10 years, we feel really proud about how the business has shaped up. Its size, its maturity, it's just its overall discipline. So us going public would be in line with maturity of the business over anything else.
And nothing, so timeline you won't disclose, or there is no timeline being set? And profitability, would you also, profitability, would you throw some light on the profitability of the company?
I think over the next couple of years, we should see a great traction there. But beyond that, this is not the place for me to really dive deep into profitability.
Okay, that's the word coming in from Ather Energy. In fact, Ajay, quite a few IPOs, and the big ones actually lined up this entire year. You've got Ather Energy, you've got Swiggy, you've got First Cry, and I can go on with some of these names which have, which are businesses which have been long existent, and some mighty businesses at that.
Yeah, a lot will depend on how soon is the pathway to profitability. Right now there is a lot of froth in the IPO market, and we have seen multiple levels of oversubscription happening. I think it's not very difficult raising money in this kind of a market with huge liquidity and a lot of FOMO. People have made money on listing gains. So we are seeing a huge amount of oversubscription happening. But when a lot of companies come in, which are not profitable, which are based on promise, you're talking of something of China 2007 to 10, or a little before that. That kind of what will happen then is you are eating into future market returns. You are promising a lot to the investors by pricing such paper at a very high premium, despite being loss-making companies. We have seen a few of them do well. We have seen, in fact, talk of a few of them getting included in international indices as well. So more strength to that. But ultimately, the valuation comes down to how much free cash flow are you throwing off, and that means by pricing at these rates, you are really eating off the future investors or the future years, unless there is very sharp growth and there is, profits start flowing through. I would be little bit cautious on that. We have seen previously also very strong listings and then the stocks going down, and that destroys the sentiment. So let's wait and watch. But overall, IPO market looking very strong with good amount of liquidity on the sidelines and people making listing gains. That's become the game, not actually looking at the fundamentals.
Right, Ajay. Obviously, we'll keep an eye out on that. But, let's just take Kunal, your BTST trades for today.
So I'll go with two buy calls. The first one is about AB Capital. The stock has come back above the 200 DMA as well as a multi-week breakout about that 180 mark. So would suggest a target of 190. Stop loss to be kept at 174. And Voltas is the other stock which I've been bullish on in the morning. It's done pretty well for itself around the 1050 plus mark so far. So would read at a buy with a target consistent at 1100. And for traders who are looking at a fresh buy at current levels, could keep a trailing stop loss of 1030.
Okay, Naresh, what about your BTST ideas?
So first would be a buy on Bosch Limited. The stock continues to slowly and steadily go up, make new 52-week highs. Stop loss now at 22,900, target price of 23,600. Second is a contra buy on SBI, which is corrected off late at a good risk reward entry point. Stop loss at 615, target price of 640.
Kunal, just picking up on ICICI Bank, since we've been discussing this stock on a daily basis, still continues to weak. I mean, even today you've got some of these two-wheeler names, Reliance, Axis is actually holding out, IndusInd is holding out, but not ICICI Bank.
Yeah, so this is the point which I was making a couple of days back, that the stock lacks momentum. So even if there was a bounce yesterday for the stock, there is hardly any follow through. In fact, the range for ICICI Bank is just 6 points or 7 points throughout the day. So I think 997 was the high and 989 approximately was the low for the stock. And I think it's been stuck into the 7-8 point band so far during the day. So after yesterday's kind of recovery, the stock not having major follow through, HDFC Bank making a fresh swing low, and the most of the banking names, SBI also I think intraday I saw was almost in a negative territory. So that indicates that there is no follow through for the banking stocks. And this poses a concern for the near-term trade for the Bank Nifty, and that is one of the major reasons why over the last couple of days I've avoided taking trade on the Bank Nifty and actually look to initiate fresh shorts on few private sector banking names.
Okay, that's the view on private banks and private sector banks as well. Ajay, let's look at these auto and Nifty auto. How are you looking at that? Because, two-wheelers obviously are doing better. We've seen in terms of numbers that have come in there as well. Overall, in the Nifty auto, is that something that one should focus two-wheelers, four-wheelers? Where do you see it going?
Yeah, you're going to get pretty good results in auto, and there is a recovery. You will get better results. The input costs also went down as the commodity prices came down. Volumes are on a good recovery path. The rural demand still remains an issue. So we have seen issues with the tractor numbers still not picking up. But the entire EV play, the replacement cycle for the public transport buses, which will give huge orders for multiple years to a lot of these players. I think all those are good factors. The trouble with two-wheelers is it's 60-70% rural and semi-urban based. So that is where two-wheelers are finding a bit of trouble. Still, the rural demand is not as strong as it should have been by this part of the economic cycle. The passenger vehicles are doing very well, and there is a premiumization happening along with the input costs going down. So you're going to get very good numbers from autos, and Nifty Auto could be an outperformer for this quarter and beyond, with good earnings numbers supporting a further run up in the auto pack. I think the PV segment and the commercial vehicle segment, these two will outperform.
Okay, Ajay, great to have you on the show and join in with your thoughts on the markets. Kunal, Naresh, we'll see you again with the trading action tomorrow morning. Today, of course, it's really been quite the tug of war. While Reliance, of course, was on one hand one of the biggest performers, continues its up move from yesterday, but could only really do that much. A whole host of banks, HDFC Bank, ICICI Bank, all underperformers. Kotak as well lower, M&M, L&T, and the entire technology pack. Look at Infosys ahead of its numbers. It's closing in with over a 2% cut on the futures. In the cash markets, of course, it flattened out towards the end. TCS just about a marginal outperformance coming in there. HCL Technologies as well has gone in lower in trade today, as has been the case with Adani Ports as well as Adani Enterprises too. Aside of Reliance, Hero MotoCorp jumped up about 4.5% today. Shriram Finance nearing in with a 6% move. MGL over a 5% traction coming in there. Torrent Pharma, AB Capital were some of the stunners in today's trading session. But for the index, it's been choppy and we're closing in pretty quiet for the day. But we'll see you with all the market action tomorrow morning at 8 a.m.